Hey everybody, Larry Berman here. I'm coming to you from an unusual location. I'm in an airport and I'm heading to California for the Future Convention. This is the next generation of financial advice, the next new technology, new ETFs, new investment platforms, you name it. The best advisors in Canada and the US are heading to this conference. So we'll see you there. We're going to be doing our show live, BNN, from the conference. And this Friday, I will be delivering the keynote speech to open the Money Show in Toronto. So really excited about that. Make sure if you're in the GTA to come in early Friday morning for that. Okay, let's dig into the chart room. Lots of stuff happening this week. A big story, employment report situation in the US and Canada. In Canada, where you had 1 foot in the recessionary camp, job losses of 60 plus thousand in Canada, very, very bad for the Canadian economy, balance of the year. So we have talked about the Canadian dollar sliding back to 140 plus, moving towards 70 cents again. That would be an opportunity to lock in some of the snowbirds in terms of your US dollar exposures. Keep that in mind. In the next couple of months, they look for the Canadian economy to conform and the Canadian dollar to be in the U.S., the employment numbers were terrible, confirmed the trend now 4 months in a row, really only our job build. Again, keep that in mind and in terms of what it means for earnings. So while we haven't seen job losses, we've definitely seen lack of labor demand. Layoffs are still pretty low. Each planes pretty much on the good side still. So again, not a lot of layoffs yet. What happened in terms of markets? Well, the long end of the curve, sniffing the recessionary impact for 4 months in a row on weak labor. Gapped up on Friday. You can see the TLT chart here. We're now above the 200-day average. And you look at where very, very strong resistance was for the last year or so, and we could see TLT rally up towards 94, 95 for the next material area of resistance. What will take to do that? It's going to take a couple other weak data points confirming soft labor numbers, and inflation needs to be on the weaker side. If we get strong inflation, it's going to be very, very tough for the long end to rally. Now, in terms of bond supply, this week we've got the 10 and 30-year auctions, so that's going to weigh on the long end a little bit. We'll see after this 25 basis point rally in the long end the last 2 days. We were at 5% in the long end. We tipped that earlier this week, and the TL2 rally has put us sub 480 as we go out here on Friday. We'll see what the demand is like in the bond market this week for long end supply. Front end of the curve, prior to the data, we were looking at, pretty much at point flip in terms of expectations for the September rate hike. Now we're looking at least a 25 basis point cut. It seems a lock at this point with the probability of a 50 basis point cut, not zero at this point. And then we'll see here on the graphic, a little more than one rate cut placed into the futures curve and almost 3 now. By the end. At one point on Friday, 3 cuts were priced in, 25 basis points basically at each meeting this year. But as we cool off Friday, we came back a little bit from that point. And we look at the leadership on the stock market, again, technology being the leader here. What looked to be rolling over a little bit and lost some momentum in the last few weeks. We continue to see that rallied up to previous highs there, just a little bit under, and we saw selling into that for the most part on the pop on the data on Friday. So can the markets break out here? That's going to be the story of this week as we look at the inflation number and how the bond market adjusts that long end supply. So what does the economic calendar look like in the U.S.? Basically, PPI and CPI, where we're expecting inline prints, generally speaking, with previous months. When we look at the core part of the PPI side a little bit better than the big surprise we saw last month. On the CPI side, we're looking for numbers that are hotter in the overall, with the core in line with last month. And that's a wrap for this week. Again, looking forward to seeing everybody at the Toronto Money Show this Friday as I do the keynote address. Have a great week, everyone.